You think that investing is more art or science?
It's a combination of both. You know what? I will say it's probably a bit more art. I just put out a video on this a few weeks ago. It talks about investing is 0% technical, 20% fundamental, and 80% mindset. So there is an art to it, and it's really your mindset, like making the decision to buy good businesses, don't sell, don't freak out, and then keep buying more every month. I got to share a fun case study with you here. It can blow people's minds, but in our onboarding, we teach people about this guy's name is Ronald Reed. He's a janitor, was a janitor. He's no longer with us today, but he built up a portfolio of $8 million. The question is, how does somebody who's making close to minimum wage become a multimillionaire? The answer? You want a portfolio of about 10 stocks, and then you want to keep buying those stocks every month. You don't skip months. This is a big mistake people make because they'll skip months. This guy bought month over month, and he did that for years. And that's how you become a multimillionaire.
I just wrapped up my conversation with Sean Tepper, and Sean is a really unique individual. He's the founder of a company called Tykr, which is an online investing and education platform that really helps you build confidence in your investing capabilities. And we spoke about a lot of really interesting stuff, including some of the investors that Sean really looks up to and how they've helped shape his investing philosophy, the difference between trading and investing, and ultimately what Sean hopes to accomplish with Tykr. Really a valuable conversation and truly insightful for anyone looking to build their investing acumen out there. So, without further ado, here's my conversation with Sean. Sean, welcome to the podcast.
Daniel, thanks for the invite. Appreciate it.
Appreciate you taking the time to come on your Thursday. So, a lot of interesting and fun stuff I want to get into, specifically about investing and what you're up
Mm.
to with your company Tykr. But before I get into a lot of that specific stuff, here's where I want to start out. We know investing is a really tricky game and a really hot topic, especially with everything that's happening in the market and everything that happens outside of the market and influences it. From all your experience, what do you think the hardest part is about investing?
The hardest part by a long shot is controlling your emotions. What we teach our audience is like you don't have to be the smartest person in the room and you don't have to be an expert at math, but you need to be able to control your emotions. And if you can do that, you can do very well. But you have experience in investing, you get it. There are people that freak out. The market goes down a little bit. They want to take all their money out of the market, put it into a shoebox, tuck it under their bed. It's that kind of attitude that's not going to get you anywhere. You got to control your emotions.
So, on that note, obviously we're all human and it's impossible to be fully objective. As much as we think we are, we're all kind of, imperfect to an extent. So, what's the best way you suggest we manage or really try to control our emotions?
Yeah, so we try to baseline with our customers, and this has kind of been a philosophy taught by Warren Buffett, which is we don't invest in the stock market and we don't invest in stocks. We invest in businesses. And what that does is it trains our mindset to look at the businesses, the stocks, more or less, the businesses we invest in, and understand what do they do? How do they help people? Right? Like, what problems do they solve? And like the companies, I'm going to list a bunch of companies on this podcast, and this is not financial advice, but I invest in Apple. Does Apple have any plans to stop selling iPhones or iPads or the new MacBook with what the M3 chip is coming out soon and their app store, like which is a multi-billion-dollar operation in itself? Do you have any plans to stop any of those products and services? The answer is no. So no matter if the market is going up and down, we do not care because we don't invest in the market. So that's just an example of the thought process we try to teach our community. Look at the business, and if you can stay focused on the business, we don't care what's going to happen in the market because I know I'm investing in good businesses with multiple streams of revenue, multiple products and multiple services. So whatever happens, I'm good.
So, on a more technical note, obviously we watch the news every day and
Mm-hmm.
these quote unquote pundits are preaching, oh, we're in for a recession, we're in for a bull market. Really, it's the news is kind
Yeah.
of a really emotional thing. But on a more technical note, so there are a lot of these ratios, like a PE ratio, price to like trailing book value ratio, a bunch of numbers that they throw at us. Like, are there any technical things or technical ratios or fundamentals that we can apply to more analyzing it from a business perspective as opposed to a stock market perspective?
So a lot to unpack there.
Yeah.
With Tykr, for full transparency, and if you and your audience are interested, we are open source, meaning our calculations are open source. So people can see how does this engine run. And what we do is we look at revenue, net income, EPS. We also look at free cash, and we also look at your assets, liabilities, debts, and equity. P to E ratio can be a very misleading indicator. So, no matter if it's high or low, it can be good or bad. So, what
Very
decision do you make?
misleading too, because there's
Yeah,
two components there.
correct. Yes. So, what we do is we look at those 8 points I just mentioned, and the ones your audience is probably going to be most familiar with, or the two are your revenue and net income. Like, what's my top line? What's my bottom line? And people get that, like, oh, that makes sense. So are those numbers increasing quarter over quarter and year over year over the last 4 or 5 years? If so, you've got yourself a strong business. So that's what we're looking at. And within Tykr, we roll that up. We try to gamify the experience. So it's really important for people these days. You got to gamify things. You got to create point systems. You got to make it easy to understand. And that's what we've done. So if you can get on a score from 0 to 100, higher the score, the safer the investment, you got yourself a strong stock. So with a lot of the noise you hear on Wall Street and news and the market's going to crash, like they're going to throw out all these things like market cap and PDE ratio. It does not matter. It does not matter. What I want to know as an investor, what are the revenues this year? What were the revenues last year? What were the revenues the previous year? So on and so forth. You can do that manually, or you can use Tykr. You're going to save hours of time and cut it down to seconds.
So do you find that those, I think you mentioned eight, those fundamental metrics are kind of
Mm-hmm.
the best predictor, the best things to look at instead of looking at the maybe thousands of ratios that,
Mm-hmm.
NBC throws at you?
100%, yeah. And we do have some ratios in Tykr, but they do not factor into the score or anything else. They're kind of in there as like people requesting them. With building a software, and this is good for your entrepreneurs out there, you listen to your customers. It's kind of like if you were manufacturing a car, like you want all the basics, like an engine and four wheels and seats, but then they're like, can you add this thing and that thing and that? It's like, sure, you got it. But at the end of the day, does it really move the needle? Does it make you generate better returns? The answer is no. But again, you add it to satisfy the needs of the audience.
For sure. So on another note, or a similar note, what's the worst piece of investing advice you've ever heard?
Boy, there's a list. I would say listening to your next door neighbor or that friend at a party or that one family member come up with that new hot penny stock. Sean, I just heard this new tech stock that came out. It's going to go 1,000% in the next year. Like that, I can't tell you how many times that idea comes my way. And then I'll just turn it back to him and I'll be like, all right, what were the revenues last year? How about the year before? And I just get a glazed look because they have no idea. Like they did no homework. They heard it from a friend and then they pass that on to me. So that's usually the thing. And I'll shut up here in a second. But what I tell my customers is if anybody tells you to buy a stock, the last thing you should do is buy it. The first thing you should do is ask why, and then you zip it. You shut your mouth and let them answer. In most cases, they're not going to give a logical response. So that's the fun way to kind of play that game.
On another specific note, so it's a really interesting game specifically because I'm thinking of maybe this is a once in a lifetime chance or a once in a lifetime thing that happens with companies. But when I think about something like Amazon, which is obviously in a league of its own, one of those, big FANG
Sure.
stocks, sometimes we have companies that have revolutionary ideas and they're just not profitable for a few years. Do you think that those opportunities are things that retail investors should look at, or should retail investors be focused more on companies that have an established revenue and established cash flow?
A good way to treat that would be we have a sorry to talk about Tykr or pitch it in this way.
It's
And
all good.
I'll pause here for a second. I'll talk about Tykr all day. I'll talk about stocks all day. If anybody's interested, don't listen to me. Like go to our Trust Pilot. That's what our customers really have to say. And we
Mhm.
do have a 4.9 out of 5. But anyway, there's a feature in Tykr that helps with exactly what you're talking about. It's called the watch list feature. And like if you add stocks to it, you automatically get notified if something happens, whether it's good or bad. So for example, if those scores go from like let's say 50 to like 55 or 60 or whatever, and then the margin of safety, that's your upside potential. If that increases, that's a great sign. And you can do that to these stocks that have potential. Like there's news like, okay, they're coming up with something cool. Their financials aren't great. They're still very much negative, but let's put it on the watch list. And if things start happening, like the profitability starts increasing, we're going to know about it. And usually we're going to, like, we know about it before the whole world starts investing into it and driving the price to like $500. So it's like you can still be one of the early investors, but in this case, you're not going to risk your money on some stupid stock that doesn't go anywhere in the next 20 years.
Got it. So the idea is you can start following the story early and then decide if that gives you enough conviction.
100%. Yeah.
Got it. So on a more personal note, you actually used to work in media, interesting enough. So I'm just curious, where did your interest in finance originally come from?
Yeah, keep the backstory really short. So I got into marketing and advertising right after college. I worked for a marketing firm focused on the TV commercials. We shot a lot of real estate related videos and promotional videos. But anyway, I learned the business model. I always wanted to be an entrepreneur, and I learned the business model. Okay, so how does a media company make money? What are the revenue streams? And I found out the most lucrative by a long shot was software engineering. And I'm like, okay, so I need to learn how to do that. Did not like coding. I learned a little bit, like how to do WordPress sites and whatnot when that was a thing. This was in the 2000s, but I worked 1 year for the company, copy and paste, learned the model, created my own media company, and did that for 6 years. That was through the recession. Now, I didn't make a whole lot of money over those years, but I learned a lot about business and ended up going through a merger in 2010. And it wasn't like a check was written like, hey, here's $1 million. It's like service businesses don't sell because they don't have a big EBITDA multiple. It's like
Hmm.
when people try to sell service business, they can't sell it. It's very difficult. So I learned that lesson. But in this case, this company pretty much absorbed us and all debts and liabilities were wiped out. And at that point, I was in my upper 20s. I was like, how do I flip the equation from working for money to get money working for me? And I immediately knew it's investing. I've got to be investing, and I started in angel investing in private businesses, made some money, lost some money, but I'm like, I want the consistent way of doing this. So I turned to Warren Buffett. So that was around 2015. So I did angel investing for about 5 years and then did the tried and true way, the reliable way, which is investing in public companies. And thanks to Warren Buffett, Charlie Munger, and Phil Town, that put me on the right path. So that's kind of the backstory on investing.
Before I get into some of the messiahs of investing that you just mentioned, I'm sure you learned a lot through doing private investing, as you mentioned, angel investing. That was one of the things that you were up to.
Yeah.
During your time period doing this, what would you say the biggest mistake was that you made from investing, and what lesson did you learn from that?
Good question. So, one thing that Warren Buffett teaches us is understand the business, understand the competitive advantage, understand the track record of the leader. And Phil Town kind of coined the phrase the four M's, which are, I'll just keep them really simple. You get the first M, which is the math part of investing. Too many investors out there, especially in Wall Street, start and stop with math. They don't look past it. You can't do that. So that's the math part. The second M is the meaning. That's the business model. How does it make money? How many revenue streams? The third M is the moat, competitive advantage. And then the last M is the management. My mistake was looking at private companies. I was really only looking at the second M, which is the business model. I was really not looking at the competitive advantage as much or the track record of the CEO or like there's not financials. So that first M you don't have. And that was the mistake. And I invested in a few businesses and most lost money. There was one that made some money, but it really didn't have huge upside potential. But I'm like, this isn't working. So if anybody out there wants to get into an investing, whether it's private companies or public, the four M's are the secret sauce. Seriously, if you can do all four, you can do it right. And our tools, if you don't know, we use OpenAI to do all four for you. Like the calculations, we do that automatically. And then the 4M, the other 3M's, I should say, really guide you through about a minute long experience per stock. It kind of gamifies it. So you can get to a score to know, like, all right, all 4M's look great, or not so good. I'm going to move on to something else.
Interesting. I appreciate you sharing the secret sauce of those four M's there for all of us investors out there. So, as we mentioned before, investing is certainly a really tricky game, and I can't say for sure if it's getting more tricky or less tricky as we're moving forward because I think there's more transparency. But with more transparency, there are more players, and with more players, inherently more complexity. So I'll leave it at there. But obviously, a regret that a lot of people have is that they say they wish they started investing earlier. So, say, for example, for all the parents out there, how can they teach their kids about investing so they can be in a better position when they're at their parents' age?
My gosh, if I would have known what I know now when I was in high school, where I'd be. That's crazy. I would say, and I'm biased here, I would start with Tykr because we have a high emphasis on education, making things simple. In fact, we have the mobile app launching here, iOS and Android, in May. It's about a year and a half project. Finally, it's coming together. But it will have Duolingo inspired learning modules. Like, for example, have you ever used Duolingo, Daniel, for language learning?
Briefly, yeah. Back
Yeah,
back when I was trying to learn a little more Spanish in high school, I used to play it on my phone. And
there you go. Like micro learning it is the new way to learn. And I have some fun statistics for you. So people out there who take courses, the starting ratio of not finishing, the starting ratio of courses is like 30% at most, which is ridiculous. Whereas get this, the completion percentage of micro learning is like 92%. People want to learn quickly. They don't want to waste time. They want to get from A to Z, the least amount of steps. And we're adding investing micro learning modules. They're inspired by Duolingo, but it's all investing into Tykr in the mobile app. So if somebody is a parent and they want to learn how to invest, or they want their child to get into it, like Tykr is going to be your fastest way from A to Z. I don't see anybody else in the market doing it. Now that I speak up about this, you're going to see probably people in 5 years coming out with micro learning modules for investing, but we want to be the first of the market.
sure, it's the future for sure. A lot of this micro learning stuff and doing
Yeah.
stuff step by step as opposed to just trying to cram a bunch of information. Definitely a
Yeah.
trend to watch moving forward. So a lot of people get, for whatever reason, trading and investing confused. Why do you think that is?
Well, both terms have been thrown around for decades, like close to 100 years. And to define the difference here for your audience, with trading, and I've interviewed a lot of traders in the past, and I know their story. Trading is still a job. You are trading your time for a paycheck, and the traders, the only traders I know that have made money, and it's very hard. Only 1% of traders make money. So in other words, 99% lose money. They're trading Forex, but they're doing 16-hour days. So they can work with Asia, then see the conversions, the currency conversions over to Europe and then over to the US. So it's very long days. You don't make money. Investing, money's working for you. This is the Warren Buffett style of making money. Now, I'm going to ask you a question here, and you might get it right. There are about 3,000 billionaires in the world. Of those 3,000, how many of them do you think are traders, and how many of them do you think are investors?
I mean, I would be lying if I gave you a number. Because, well, not lying. I would be wrong if I gave you an exact number. But my best estimation would be most of them are investors because most of their net worth is tied up in their company. So inherently, whether they like it or not, that makes them investors.
You're pretty close. Well, it's zero traders. There are zero billionaire traders, and of the 3,000 um, billionaires in the world, it's about a 50-50 split between entrepreneurs and investors. And those investors can be stock investors or real estate.
So I appreciate you sharing that. But on a specific note about investing, a lot of the times, as we mentioned earlier, we can make mistakes when we're investing. And part of that is controlling our emotions and being able to tell ourselves, I should stay in this for a while or I should cut my losses. So, from your experience, how can we best tell when we're wrong about an investment?
Yeah. So getting right to like that first step, getting right to the most important part up front is that math part, understanding the financials. And what we do is we help people get into a business. So they're buying a business that's strong from the word go. Like we don't want people getting into something that's risky. We don't like, for example, penny stocks and most IPO stocks, they do fail in our platform. They're not strong enough. So we want people starting off on the right foot, strong, safe, usually boring businesses, but these are businesses that make you money. And then we teach people, when do you sell? Well, there's 3 steps there. Number 1, let's say a stock moves from on sale to overpriced is one. Step 2 is that 4M score draft falls to like close to 59 or less. And step 3 is what you'd call rule 1 investing. Rule 1, don't lose money. Rule 2,
Don't forget
don't.
rule one.
Right. So we teach people you never sell for a loss. I made the decision, this is going to sound crazy. I made the decision years ago, I will never sell for a loss. And I kept that promise. And how that works is when you buy a strong business, and let's say the market goes down. Well, number one, you want to buy more because that's called stockpiling. That's where you make the most money. But 2 is you don't worry about it. You let it ride back up because it usually does. And I've done this over and over where I buy strong businesses. I don't care if they go down a little bit and I'm in the negative because I know they're going to pull back up. So that's one thing our customers really appreciate. They know they get into something strong from the get-go. And 2, if it does drop, don't worry about it. You only sell when you're in the profit.
On a bit of a higher level here, do you think that investing is more art or science?
It's a combination of both. You know what? I will say it's probably a bit more art. I just put out a video on this a few weeks ago. It talks about investing is 0% technical, 20% fundamental, and 80% mindset. So there is an art to it, and it's really your mindset, like making the decision to buy good businesses, don't sell, don't freak out, and then keep buying more every month. I got to share a fun case study with you here. It can blow people's minds, but in our onboarding, we teach people about this guy's name is Ronald Reed. He's a janitor, was a janitor. He's no longer with us today, but he built up a portfolio of $8 million. The question is, how does somebody who's making close to minimum wage become a multimillionaire? The answer? You want a portfolio of about 10 stocks, and you want to keep buying those stocks every month. You don't skip months. This is a big mistake people make because they'll skip months. This guy bought month over month, and he did that for years. And that's how you become a multimillionaire.
On a more personal note, I think we spoke about this a little bit earlier, but other than yourself, who's your favorite investor of all time?
Warren Buffett, of course, is up there. Charlie, rest his soul. But Phil Town has been a big inspiration. We actually, about 70% of the math that went into Tykr is inspired by him. So I have to give him a ton of credit.
Fair enough. I think my answer would be Peter Lynch, but maybe we're all biased to an extent
Mm-hmm,
there.
mm-hmm.
So before I get into some of the ticker stuff that we alluded to a little bit earlier, I want to ask this question because this is also a really hot topic. And I think at the intersection of a lot of the emotion and media and really some of the short and sometimes medium term gains. But what are your thoughts on hedge funds as investment vehicles?
I don't love them. The reason is, and Warren Buffett made a prediction on this saying that index funds are going to outpace hedge funds, and that came to be true. And what happens with hedge funds is you're paying a premium for a service, and by premium, you're usually paying a 2% AUM and then 20% profit on the commissions. And it's a lot of buying and selling, moving in and out, and it's all this effort for what? For nothing greater than the market. So that's why I tell people save your money and go into index funds. So I think if you're running a hedge fund, you can make a ton of money as like if you're running a hedge fund, because you're going to get a lot of family money, you're going to get businesses, and they're going to say, hey, can you put together a fund for us, a portfolio that's going to match or beat the market by a little? You can, and they're going to be working long hours and doing all this effort. When I tell people, it's like, you can do this yourself. Like buy a few index funds if you want to match the market, or you can buy some individual stocks, do Warren Buffett style, and you can beat the market by a long shot.
Yep, definitely a hot topic these days and appreciate your thoughts. So, to get into Ticker a little bit, before I get into some specifics about the platform, how did you get the idea for Ticker?
Well, that was actually Phil Town gave me the inspiration. It was 2015 and 16. I literally read as many books as I could about value investing, as many as I could. And I can tell you, there's a lot of noise and a lot of fluff out there.
Do you
And
have a favorite value investing book?
Rule One, which is written by Phil Town, yeah. And second to that would be Payback Time, which is his second book, and that's the name of my podcast as well. But with that journey, what I did is, so you know, is I created this Excel sheets. It was very clunky, but I'm like, I had to create a gaming system, a point system to make decisions. So I know like a red light, green light type decision making process with stocks. Is it good? Is it bad? And I used it for about 4 years, making returns usually between 15 and 50%. It was actually closer to that 50% per year. So it brought us to 2019. And that's when I started sharing it with some retail investors as well as an institution or two. And everybody was like, when are you going to turn this into software? So that was how Tykr came to be. And that, again, a lot of credit goes to Phil Town and Warren and Charlie.
So you mentioned earlier that you had a little bit of coding experience, even though you didn't really enjoy that. But how did you go about building out the platform? Because the website is beautiful. I'm just curious what goes into the back end of that.
Oh, sure. Yeah. So my background, it's actually not investing. I got into investing around 2010, but I actually started in tech around 2005 or six, around the time I was graduating from college. So I didn't get into coding like a software engineer. I found it a lot more effective to project manage, which is there's a component of sales there as well. So project management and selling. And I did that with a lot of corporations and whatnot. So you're not really writing code, but you have to be very good with Excel. You got to be very creative. You got to be solving problems, and Excel is like your best friend. So the first version, of course, I did everything myself. The whole algorithm was written within Excel. Now I've been managing software engineers all over the world, whether they're from India, Bangladesh, France, Brazil, and of course, all over the US. And just economically, I'm like, the best way to execute this is getting a team from India. And I've done that. I mean, I probably built a few hundred different web platforms in my life. And I'm like, this is just another Tuesday. Like, I'm going to get a team I know, and let's do this. And I could go into that for hours, but depending where people are located in the world, you have to create a different level of rigor around software engineering, especially around QA. So I know those expectations going into the project, but yeah, the version you see today is actually the third version. The first version was very ugly, but it was just a prototype to get out there, an MVP to test the market. What do you guys want? And that's the thing with building software is you want to get feedback from your customers really fast, and you don't even want to charge people right out of the gate. Like, so, when I launched, I'm like, I want 100 people in the tool as fast as possible, and they get it for free. In return, I want feedback very fast because I want to know, what do you guys like? What don't you like? What can I do better? You want the harshest feedback first so you can iterate on that and create a monetizable platform. So anyway, thanks for the feedback. I do give the credit to my team, but I put the guardrails on to make sure we stay on the right path.
Yeah. I'm happy that you shared it took a few iterations because usually it takes that many to get to something that's really awesome. But
Oh
glad
yeah.
to see that it worked out. So, say someone is a complete beginner at investing and really knows nothing. How can Ticker help them build their investing confidence?
You just said the key word, and I got to drill into that for a little bit. Confidence. So get this. You're going to laugh at this. So when I first launched Tykr, I was thinking about returns because my returns are very good, and a lot of our customers are getting great returns. And if you feel like you're behind the eight ball, you should have more in investments. There's a level of anxiety thinking about, oh gosh, I don't have enough in my savings. Guess what? There is a solution. You can have peace of mind. Tykr can make up for lost time. Now, we started using language like beating the markets and beating inflation, and all that's cute. But we really found the home run marketing when we started using the word confidence. At the end of the day, people want the confidence knowing they can do this on their own. And that took off like a rocket. People are like sharing it with their friends and like, yes, I can do this on my own. So when people join Tykr, to kind of verbally describe the experience to you, you join for free, no credit card required, 14-day free trial. And then after that, if people are interested, it's $99 a year or $14 a month. But when you join, you get a welcome email, a welcome video, and then there's a series of articles you can read, but they're sent to you every day for over 20 days. So you have your option. You can either read them in all one go, or they're peppered in your inbox like, when do you buy? When do you sell? How do you reduce risk? Really basic things. And that people love because they know like they're getting this handheld experience with Tykr to get up to speed, to start buying their first stock, start managing their investments. And it's none of this condescending $20 words, acronyms you don't understand, you might find on other platforms like We Are Your Buddy, and we're here to do this together. And that type of experience, it's not only resonated with the men out there, but we do have a lot of women out there who are like, I'm taking control of my investments. Women, as if you don't already know, they're in a relationship, they're not the ones to really manage the pocketbook and the investments. Well, guess what? Tykr's changing the game for that, because we've got women in our community that are crushing it and it's empowering them. So anyway, I'll stop talking there, but confidence is the word. That's the key word.
It's beautiful that you're helping people build that investor confidence and build that wealth in the long run. And I want to ask here on a parting note, you've mentioned some of your background, how you started Tykr, really the thought process behind building the platform, what your goals are. What does the future hold for Tykr itself? Do you see yourself growing the company? Do you see yourself, becoming part of a conglomerate, maybe becoming a conglomerate? Where do you see it going?
It's we look at ourselves more as like a media company. I'm really leaning into YouTube, and yes, we have the subscription tool that's helping people, but it's kind of like a media company / education company. And I really see us, in the coming years, we've got, for context, about 9,000 customers in about 50 countries, but I could see us in the next 5 years getting to 1 million. If we have the right education tools, those micro learning tools, and a viral coefficient, which means people are sharing it with their friends and they share it with their friends, we can get there. And I do see us going that direction. We have been offered buyouts. People have come to us, and it's not the right thing to do, because the options are they're going to close it down and use the algorithm to turn it into a hedge fund,
Yep.
right? So that's option A. And option B is some guy is going to take it over and not do the education. He's not going to do free webinars, which is something I do. He's not going to be on YouTube creating the free education. It's like there's got to be a free component of education and value going out, like Gary Vee style. And then if people want more, you can join the tool and use it. So I don't see anybody else doing it as well as my team and I, to be honest.
That's an awesome outlook, and best of luck with the plan. I'll have to stay tuned and see what happens for the ride. But Sean, thanks again. It's been an absolute pleasure, and thanks for coming on the podcast.
Daniel, thanks for the invite.